right, that's all set. All right, so if you guys start hearing me talk to other people that aren't here, it's because I'm live. All right. Oh, I just got the email back from them. Thank you for your interest in the Apex Trader funding. To move forward with your application, please send the following information to... Oh, there we go. No. It's 6 minutes. Bro, dude, just to buy all the accounts will take you like 30 minutes. I'm not even joking. All right. Good morning, everyone. Good morning and welcome to the live stream. We're just waiting for the market open right now. The market opens in the next 5-minute candle, so we'll see how the market reacts once we open. When we have done our little market analysis in this first like 5 minutes, as we're just kind of getting ready for the market to open, London session manipulated the highs, so left here. So that's an indication that potentially from London session, price is potentially going to go lower. Now, we're not going to like stick to a bias. We're not going to get stuck in our head on that it's only supposed to go down. We're going to wait for what the candles show us, see how price reacts to levels like London high, London low that have not been touched. Same with Asia low that has not been touched, and see what price does at those levels. But with what we see price has done, it technically has the probability of going lower today, but we'll see how it goes. But good morning, everyone. Good morning. Good morning. This line. Also on the 1 hour, we've just been chopped. Like we've just been dealing within this range. Hopefully this week we can deal outside of the current range that's just been consolidating on Nasdaq. Like even if you go to the weekly time frame, like the last 3 candles have all just been in a very small range. So hopefully we can get out of this range. Yeah. You can if you want. It'll be slightly different, but you totally can. You could just go higher. Like if I do 5, you just still do 10 or something if you want. All right. All right. Yeah. All right. Yeah. Yeah. Just do 15. So if I say I'm gonna do smaller, then just do the size that. No, you're maxed out on 15. And you don't want to go. So if you did 2 in Q, you'd be basically risking your entire loss limit. Yeah, if you did, like, say if you went to NQ and you wanted to do more than 1, because 1 you're risking almost the same as 15 micros. So if you did 2 NQ, you'd be basically risking your entire loss limit. Like if you lost that, you'd lose like about almost 3 grand. So you could basically, you only get 1 trade opportunity and you hope it doesn't lose. Yeah. But yeah, so the bigger ones, then you have more drawdown. Like you could lose 3 or 4 times trading 2 or 3 NQ. So then you have like, yeah. But with the current accounts, your drawdown's only like 3K. So you lose once, you're done. Yeah. So if you look at your TradeSyncer and you go to let me see real fast. And if you go to the cockpit and then you look on the far right hand side, see where it says cross, and you can do MNQ or like you can switch that to NQ. So you can change your cross, like, so if your lead account is trading MNQ, you can have specific accounts trading NQ instead of MNQ when you open a position. No, it would open up 3 NQ. Yeah. So if you open 3 NQ, it would open up 3. Yeah, it would open up 3 MNQ on the other accounts you don't want to trade NQ on. Yeah. But you can change the multiplier, or like you can change the amounts. Like, see, there's like the number, like the ratio. I'm just saying on TradeSyncer, see where it says the ratio? Yeah. So you can change the ratio of like, yeah. Yep, exactly, yeah. So what you'd probably do is want to trade your lead account on your screen would be like a MNQ account. So you trade 15 MNQ, but then your ratio on NQ would be like 3. So then if you open up 15 MNQ, you're only opening up 5 NQ. Which, I don't know, 5 NQ is pretty big. I don't know if you want to do that, but... that'd be a huge trade. But what if it smacks? But what if it hits? Okay, so now the market's open. The bell has rung, and now you can see immediately once the bell is open, you start getting bigger candles. We'll see if a fair value gap. I assume a fair value gap is probably going to be created right here on this first candle, but also we've seen it literally immediately go the opposite direction. Good morning, everyone on the stream. Holy smokes, look at this candle. Let's see how it reacts to this 5-minute low here. And it's almost to London low. I'd really love for it to hit the London low. I mean, even in this one candle, and then see what it does after it hits that London low, if it even gets there. But also, it's tapping into this 5-minute low right now, too. Geez, that is how many? Let's see. How many points is this? Oh, not control. It's a 405-point candle. Right? Is that right? 405 or? Yeah. $101 move in that candle. That's oh my gosh. Yeah, it's gonna go all the way London low. Nice. Hit London low. Come on. This is like one of the biggest candles we've seen in a while. Okay, so we'll see here. Do we get a fair value gap on this next candle, which I assume we will? If we retrace another 400 points back all the way up to this high, that'd be pretty insane. Those would be two massive swings. But I assume we're probably gonna get a fair value gap off this candle, and then we'll see how price reacts to the fair value gap. Do we get an inversion right off the bat, or is it gonna play around? Dude, imagine this next candle, it literally just retraces that entire candle. That'd be crazy. I know, but this is a massive candle to just retrace. Yeah, that candle, by the time it closed, that is a 450 point candle. Oh my gosh. Yeah, it might retrace it. Oh my gosh. Bro, no way it's gonna retrace this whole candle. Oh my gosh. It's not gonna leave a fair value gap. Are you serious right now? It didn't leave there's like a very small one. Yeah, I mean there technically is one, but I would not use that. Yeah, they're like, let's just literally ruin everybody's Monday. Yeah. It's like tiny. No, there's not. It's literally gonna retrace this whole candle, dude. Oh my. Dude, imagine being a short, you're like, dude, this is gonna hit, and then this candle comes in. Right, and if you're still watching the screen, this is like typical when the market opens. There'll be like a push, and then usually like a manipulation. So it's like a manipulation, and then a push all the way back up. And so that's why we kind of be patient with our trades, because price likes to do these crazy swings like this in the beginning, and then all of a sudden you'll start seeing it like, okay, it's making a clear direction now. It's gonna pick which way it wants to go, and then that's when we start looking for trades. Okay. Oh, that's because so we have live. No, we have live data. Wait, what time frame are you on? Okay, yeah, we have live data. So because you don't have a trading account, your live data isn't connected. So you're probably behind us like 5 or 10 minutes. Yeah. So when you get an actual trading account, you'll then get to auto subscribe to live data on TradingView, and you'll get the live data. Yeah. You can also pay for it on TradingView. It's like 30 bucks a month, but I wouldn't do that because when you eventually get into prop firms, they'll just come with your accounts. Yeah. Oh, thank you so much for the follow, Edwoli. Edwoli, thank you so much for the follow. I appreciate you. Hope you're having a great morning. We're just trading in queue right now. We're watching what the market's doing. As you can see, I had a crazy 450 point move down to then a massive retracement of that entire candle all the way back up. So hopefully you weren't in a trading, got wrecked. I mean, technically you could have caught a nice short and then immediately, if you flipped your position, caught an amazing long. Yeah, this candle literally is probably a 400 point candle right here. Let's see. Yeah. 382 candle or point candle. That's crazy. So the market right now, from this current market open, we do not know the direction yet, right? We thought in the first candle, it's like, oh, it's probably going to go short, right? We're probably going to attack the London low, maybe even attack weekly low and Asia low. And then you get this retracement candle. It's like, okay, now it's probably going to target London high. Is it going to go to like a day high up here? So in this market open, we still don't really have a clear understanding of what does the market want to do this morning. It looks like it just wants to chop this morning, but we'll see. So that's why we wait for those. That's why we wait for our model to play out. We wait for those inversions. We wait for fair value gaps to be formed, and then we let price tell us where it wants to go. But as you can see too, when price got close to London high, look at the reaction that came in. Lots of buyers came in at that London low and this 5-minute low. So we could attack the London high now before we actually decide to do something. That'd be kind of like the dealing range, and hopefully we'd break out of that today and not stick within it. Does anybody in the stream have any questions on what I'm doing, what I'm waiting for, what I'm expecting from the market, or anything I can answer, or even in the Google call too? What is going on here? Yeah, so London session, so like there's 3 sessions that really matter in the market. It's Asia session, London session, New York session. There's even more than that. There's like Australia, I think, is one of the sessions, and I think there's a couple there's a lot of other ones, but they're very small. But essentially, the only way you trade Australian session if you're trading like the AUD, the Australian dollar, and like if you're trading the Asia session, the only way you'd really want to trade the Asia session is like crypto, or like you're trading like JPY, or currencies in the Asia session. So Asia session is basically when Asia wakes up and starts trading. So like Tokyo, Singapore, China, those areas of the world are starting to trade. Asia session within in Q tends to be pretty boring. Like it doesn't really do much. If you look at this Asia session, so Asia session is from 16 or technically 1800 hours to midnight would be what you would consider Asia session. And this one had a big move in the beginning, but then it did nothing after that. It literally just consolidated. London session is where areas around London would be trading. So like UK, London, Germany, all those areas are up and awake and trading. And so London session actually is a pretty, if you're in a time zone where London session is a good time for you, like London session is actually a really good trading time for NQ. For us in America, you're trading really late at night, like 1 a.m., 2 a.m., 3 a.m. It's pretty hard unless you're like, you can make that work in your life. That I can't for me, but it's actually a good session. So it's just London. You say London session because that's around that area. That's who's awake and trading at that moment. And then New York session, that's when they call it New York, but it's when America's awake and trading. And that's where you get the much bigger moves will happen in the New York session. And then, yeah, so those are what the sessions are. And like those lines that you see on my screen, the London high, London low, it's just the low that was created within that session. And New York will usually target those lows because there's a lot of liquidity at those lows or those highs, and they'll grab liquidity to then move the market a certain way. And liquidity is like the term, but it's essentially like buy or sell orders. So people put their stop losses who went short at this London high. So price will go up and try to stop all those guys out because those are buy orders, and then they can push price higher. Or if they go to London low, you're hitting those people who were bullish, who taking out their stop loss orders, who are sell orders, who are going to then push price lower potentially. So yeah, I don't know if that made sense. Okay, yeah. But yeah, that's why we pay that. Those are honestly like the session highs and lows are probably the most important lines on the screen in the morning. And then once you break out of those, your next important lines are like day highs and weekly lows, or day highs and lows and weekly highs and lows. Those are the next most important lines to pay attention to. Yeah, because usually you break above a London high, and if there's nothing above another session high above that, it's probably going to the next day high. And that's where you catch like a really good expansive move. Yeah. Yeah, it's from the weekend, I think. Yeah, I think it's what it's from. It's Zachary, Brenton, and Lima. Yeah, Lima and all of them are. Yeah, streaming. Okay. Kendra says hi to y'all. Everyone in the live streaming Google Meets. Kendra says hi. I just name dropped my wife. But I don't know. I've been kind of careful with it. I don't know. Like with the live stream and stuff. No, he hasn't eaten. All right, filling out that Apex application right now. Yeah, the chart's not really doing anything right now. Dude, that move is crazy. A massive move down, and hey, let's just go the absolute opposite direction. And let's make everyone think we're going somewhere, and then let's not actually. Let's not do that at all. Yeah. It might form a fair value up on this candle, actually. Actually, well, this one has a lot more time in it, actually. It could definitely not. If we get a fair value up on this candle here, we could get something quick. We'll see. So a fair value gap is 3 candles in a row. Let me see if I can find an example right now. So okay, so if you look at sorry, real fast, Brenton, go to the bottom right hand corner of your what was I doing? Go to the bottom right hand corner of your trading view, and you see where it says UTC -7 for you probably. Is it -7? It's probably, that's what I think it is for you. Okay, if you click on the time on the bottom right hand corner of your chart, there's like a UTC something that it says. You want to change that to New York session so you're on the same time as us. So change it to New York, and that'll just change the time of the candles on the bottom of the screen. Let me know when you're there. Okay, so go to the 7:55 a.m. candle on the screen on the 5-minute time frame. Do you see that candle? Okay, so when there's 3 consecutive candles in a row, and there's a space between the wicks, so from this wick to that wick, there's a fair value gap in between those 3 consecutive candles. When the wicks create a gap between each other, that's considered a fair value gap. So like right now on the current candle that's open for us, which you might not have it because you don't have the live data, but there's a fair value gap formed because the wicks have not touched each other. They've left a gap between 3 candles. That's considered a fair value gap. So that is also what we'd call IRL, or internal range liquidity. And so price will either respect those, and if it respects it, it's probably going to continue. But what we do in my model, we wait for what's called an ILM, or an inverse liquidity model. So if price came in closed below that fair value gap, just like this massive candle did at market open and closed below all these fair value gaps, that's what's called an ILM, inverse liquidity model. Now we didn't take this one because it's old fair value gaps. We don't pay attention to those because, as you can see, it did that and then it literally did the opposite right after that candle closed. But yeah, a fair value gap is just a gap between 3 candles in the wicks. Slayer, good morning, dude. Hope you're having a good day. Just explaining some fair value gaps real fast. And yeah, so we have a very specific model that we cannot trade unless a candle inverts those fair value gaps and closes below them, basically disrespecting it and showing that it's probably having a trend reversal. Yeah. So it looks like we actually are going to get a fair value gap here on this candle. And it looks like price is going to, what would be really cool, we get a fair value gap and then price hits London high and then maybe we reverse. Oh shoot. All right, I think I'll do the, yeah. Let's do this real fast. Oh yeah. All right, I should have just extended it. Let me know. Hang on. Actually, so let me know. Did it just extended that? All right, good. Now it's unlimited. Now we can actually be on this call for 48 hours. So I expect this to be on this call for 48 hours now. No, I'm just kidding. That'd be crazy. That would make you forgot to post in Discord. Oh shoot. Sorry, Slayer. My bad. I totally forgot to post in Discord. I'll do that right now. I'll do that right now. I didn't do too bad. It was 96. It's not great, but it's better than what I've been shooting. Oh, well, so actually, I would have shot like a 80, but I had 2 holes that just bent me over. Yeah, and that's the only reason I shot really bad. There was literally, I had 2 holes where I shot a 9 and a 10, and then the rest I was doing like birdies, par, and a couple bogeys. Yeah. Cinnabon. I've never heard of that. Where is it? Dang. That sucks. Dude, we played at that course again that we played at together. The Rancho San Joaquin. I love that course, actually. I really like that course. All right. Sorry, Slayer. I just posted it up in Discord, so I totally forgot to do that this morning. Well, all right, now it's in Discord. Okay. Okay, so we might be able to get an opportunity here on this candle price action soon. We'll see though. See how it plays out. streamer mode. That's why I disable. Settings, invites, here we go. Oh my gosh. All right, it tapped into London High. Now that we've tapped into London High, let's see how this plays out and see what kind of reaction we get from this London High. Hey, sweat, we tapped into London Low and then immediately flipped to tap into London High. So see how this candle ends up playing out. And so far we've only gotten one fair value gap this morning. Oh, Slayer. I've been doing back testing on this model. I remember you were asking about that. I think it was last week. You were asking about the back testing. And I have actually some good results from it. This back testing session I'm about to show you is taking every single inverted fair value gap that happens from 6:30 or 9:30 a.m. Eastern time to market close at 1600 hours Eastern time. So if we go to back testing, this is our session results for taking every inverted fair value gap for all of February, March, and April. I'm trying to get to present day in June, February, March, and April. Yep. And in that account, we took every single fair value gap ever created. And every time I inverted, we took a 15 MNQ on a long and a 10 MNQ on a short. We never trail stops. We just leave them where they're at. And we longs go for a 2.5 standard deviation and shorts go for a 2 standard deviation. We would have made $88,637 in our trading account. Now that's in one. I have 45 accounts, so that's pretty good money across all the accounts. Win rates over 50%, which I like. I would like it to be higher, but win rates over 51%. Profit factor is 1.36. Not a great profit factor, if I'm going to be honest with you. I would like it to be higher. Win percentage on the day is 66.67%. So over half the days we're going to end green, which is that's a nice stat. And then your average win to loss, you're 1.28 on the average win to loss. So your winners are outweighing your losers, but it's like barely. Now, I never trailed stops. I never, let trades run on this backtesting model. I want to do another one after I get to present day on this session where I trail stops and I let trades run. So like once I'm kind of in a position, I don't close it unless it inverts a fair value gap or if it taps me out like break even or as I trail stops. So and I think the win percentage and the profit factor will go up much higher if I do kind of like what I normally do. Because and like you guys have seen in my trading, we don't really just let our stop loss sit at one point. We usually will trail as we get displacement. But in that model, I did not trail at all. So we let the full stop loss hit if it hit. So, but still, even with letting it do that, not being really like a smart trader, right? With trailing the stops, it had great results. You're taking a lot of trades though if you're taking every single inversion. I mean, I think I took 307 trades doing that backtest session, which is, it's a lot to do that. Also in my next backtest session, I'm only going to be looking for inversions for like the first 2 hours of market open, and then once we get the position in, we just kind of let that one run and see how it plays out. But like, because like the first 2 to 3 hours of the market open is like the sweet spot. After that, what I found in the backtesting is you get a lot more losers later in the day. Like that's where you start getting the choppiness of the day because price has kind of set its, you know, direction. And so I kind of want to change the next one where it's not every single inversion. We look for inversions in the sweet spot, and then once we get those trades, we just let them sit and let them run as far as they can. Or if they just get closed out, and then we aren't allowed to open a trade after the sweet spot. And I think when I do that backtest session, it'll actually be much better stats. I think the win rate will be higher, your profit factor will be higher, and your average win to loss of trade will be higher. Those are the 3 things I want to get better on this on the backtest sessions. But not bad results, right, Slayer? Like, yeah, they're not bad results at all. All right, we might get another fair value gap here. Price could also run without us here and just shoot up. But we didn't get an opportunity this morning yet. We did hit London high. It looks like price might want to displace here, but we still got a lot of time on this candle. So this candle definitely can come back down and erase this fair value gap. But we'll see what kind of happens here. But I think what I want to do this week is kind of go with the model of just like trying to take every inversion because it works. It clearly works, and then try to refine it of like how can we refine it, make it a little better, and get better data. I wonder what that looked like on the 1 minute time frame down there. 1 minute inverted. Huh. Yeah, on the 1 minute actually gave a good entry opportunity. That's another thing I should do a backtest session on the 1 minute. Because the 1 minute gave us in our model technically an entry. But we just don't trade the 1 minute. And that would have been a banger trade if we got on that 1 minute. Oh my gosh, that would be such a good trade. Yeah, I wouldn't be opposed to getting some 1 minute data on there, and then maybe we start dropping down to the 1 minute. The 1 minute's crazy. It's so intense. All I'm looking for is price to invert a fair value gap. That's literally it. So I try to keep my model is like the trading strategy. I call it the model, and it's basically so when price does something, I don't have to think. I just execute once it does what I need it to do. But all I need it to do is like here. I'll try to draw an example out. So like say this candle closed this way, but then another candle comes down here, and then let me edit this real fast. And say we get a big candle to the downside here. Right? Say we get a candle like this, and it has like, you know, why is it doing that? It's so annoying. Whatever. So say we get a candle like this. It closes below this fair value gap, right? That's my model, right? If a candle went down and I have to wait for that candle to close, and I can't do it if the candle's still moving, right? So what I mean by candle closure, this candle's still moving, so I can't use it until it stops moving. We get a new candle. So if the candle closes and closes outside of this fair value gap and inverts it, which means it just goes in the opposite direction of this fair value gap's bias, that gives me my entry model. So then I would take my fib and I draw up my entry model. And then this gives me, so now I don't even have to think about my take profits. My fib automatically gives me my take profits. So I go on a short, I go for 2 standard deviations. On a long, I go for 2.5 standard deviations. I take a 50% TP at those standard deviations, and then I move stops to break even, or I kind of trail to a fair value gap, whatever, and then I see if it'll run. Yep. Yep. Yes, exactly. Yeah, if we're going long, we're gonna shoot for 2.5. And the reason why I have that is because shorts are going against the overall trend, right? So if we go to the weekly time frame, the overall trend is bullish, right? When you zoom out, it's overall bullish. So when you're going against the trend, your moves aren't going to be as big as if you're going with the trend. So that's why I go for shorts, only 2 standard deviations, because you're going against trend, and then 2.5 for longs because you're going with trend. So your moves should technically be bigger if you're going with trend statistically. So it's all like your probabilities, right? It's the math of like, what's your probabilities? You have a higher probability with longs and a little bit lower probability with shorts. But that's why we only take partial take profits at those levels, because if it did run, we want to be able to catch that and capitalize on it rather than being completely out of the market. Yeah. And sometimes if like, it's also very much dependent on how I'm reading the market. Sometimes I will just say, hey, we're just going to get what we can get today. We'll take full TP. It's really choppy today or whatever. Like, let's just get in and out of the market. Like today might be one of those days, like, let's just hit full TP at whatever we can get and not try to sit here and chip away at it. Vampish, yo, good morning, dude. Oh, I just noticed you followed. Thank you so much, Vampish. Hope you're having a good day. Let me know if you're, it looks like you might have just hopped into the stream. So let me know if you got any questions, if you want to get caught up. We're just kind of waiting for a potential trade opportunity here. Looks like we might actually get one soon. The last candle kind of looked a little bearish, so it might come through, but we'll see. But yeah, we're just waiting for an ILM right at the moment. Yeah, hope you're having a good morning. I'll be sure to stick around. Sweet, dude. Yeah, we're trading, just so you know, we're trading MNQ on we're doing Nasdaq this morning. Yeah, that's what we're typically trading every single morning. And then also we will do kind of once our trading session's kind of over with the Nasdaq, I'll hop on over to crypto, do some analysis on higher time frames and see, you know, especially after this last weekend, crypto had a big kind of sweep of liquidity to the downside. We want to see, is that a potential opportunity that price is going to start, reversing and going long, or is price going to continue to the downside with this war news and stuff? And are we going to wait for those long opportunities? Because so yeah, it's kind of like our typical stream session. We do a live trading session in the morning, in the beginning, and then go into some analysis later on in the stream after our trading session is kind of over. That'd be sick. So I'm all over the macro side. I mainly trade commodities. Okay. So I'm all over the macro side. Nice, nice. So you swing trade, Vampish? I assume that's what you mean by macro side, like you're more swing trader? Looks like we could potentially get an inversion soon. We'll see. And the thing that I love it, if we can invert here at the London high, I would love that. Yeah, well, I think the BTC pullback was a couple things, right? When it pulled back, that was the same time as when United States bombed Iran. Okay, so right after that news hit, right, USA, breaking news, USA bombs Iran. Then you get massive market movement to the downside, right? It could be manipulation. It also could be just the market's fearful, right? With the war. Obviously, there's going to be some people who, bigger money, who's in the loop on some things. They're going to get it tipped off probably of, getting in shorts or opportunities like that. But I don't think it was... I don't think it was as market manipulation as it was people just fearful of the current state of the world. That's why I kind of want to do some analysis after this. And because I'm big on crypto, I do swing trading like you, Vampish. I do more swing trading on the higher time frames. The volume patterns are way too consistent. Okay, yeah, it definitely could be manipulation. I haven't looked at the chart this morning on it yet, so I haven't really gotten a feel for things yet this morning. So once I get in there, I could probably tell a little bit better of like, oh, that was, yeah, definitely just manipulation. Which most of the time, that's really what it is, right? When these big events happen, they'll have a manipulative move to the downside or upside, and then it continues to the same old, right? But a lot of money was liquidated from the crypto market this weekend. I think it was like almost $1 billion something dollars, or $850 million, I think. Yeah, exactly. Price could also run without us this morning. Let's see, on the 1 hour, if price ran up, if price could on Monday run up and like maybe break some of these highs, maybe we'd have a clear direction then in the market, which is we get out of that consolidation. I would love to get out of this consolidation. Yeah, a lot got liquidated. I don't track crypto too much, but it helps to see market sentiment. I've been trading very, very consistently like this for now over a year and a half. Well, the reason why I live stream is just taking people along with my learning journey of what I've been learning, how I've been getting better as a trader. I just finished a long mentorship within trading, which kind of got me into this NQ trading and scalping the market. And so, yeah, it's been a year and a half journey. I was able to, yeah, no, this is not easy. Trading, when I first got into it, I was like, trading feels pretty easy. Like, right? It's like, it just goes up or down. And then you get into it, right? You start trading, you're like, dude, this is not easy. It's not that simple. But yeah, I definitely have learned a lot in the last year and a half. Yeah, I try to be a chill guy. Yeah, and I just try to, you know, the whole reason I'm doing the live stream is to bring people along with me, help give people opportunity. Like I try to get like some discounts for, you know, prop firms and stuff, and then just be super transparent, like showing you guys my model and showing you guys what I'm seeing, what I'm looking for, what I want to see the market do, right? So yeah, I love that you're here, Vampish. Thanks for coming and hanging out. I'm by no means an expert, but I'm hoping I can be and really grow to be an expert, you know, over the years. Yeah, very good for journaling, right? The thing I love about the streams too, like when people come and ask questions, it forces me to like actually have an explanation of what I'm doing, right? And I think it's really good to, like, if you're doing something and you're you're doing something and you have to explain it and talk about it, it helps you like lock in your understanding and knowledge of that thing that you have to explain and teach, right? Yeah. It's kind of like a quiz every single day. I've just come back to trading since the whole Iran. Yeah. I just checked with my mentor in the Discord. He posted some of his what he's doing this morning. He actually caught that 1 minute long, Zachary, and he's in a killer trade right now. He just posted. He didn't do a call this morning. They didn't do a call this morning. Yeah. No, he just posted in his position this morning. He's like, guys, I'm looking for potentially. He's like, if this level holds, he's looking for 22,000, which it hit. It hit 22,000. But he like just posted this morning that he opened a position. But I mean, he trades on the 1 minute, right? So like, you go to the 1 minute, it clearly gave that signal, but we're just on the 5, so it didn't give us that signal, which is okay. We just might not be able to trade today, unless it does a little reversal here. I mean, it still can. There's still a lot more time. How big is his? Let's see. Yeah, he opened up only 2 in Q, so he did very small risk, but he's up like 3 grand. It's pretty nice. Yeah, the guy who was supposed to do the call this morning, he's sick, so they didn't have the call this morning. Yeah, you never want to force your trade, right? Especially if you see someone else posting, right? And you don't want to, like, oh, they're in a long, maybe I should hop in right now, right? And then you're buying his TP, and then the market reverses on you, right? Yeah, I've learned I've learned not to chase because I've really gotten burned so many times from chasing. And that's why I have my model, right? Like I don't trade unless my model hits. If my model doesn't hit, I do not have a trade. And so I also like, that's the nice thing about having a model, because if it's not there, it's not there. Don't force it. But if it is there, take that trade and it's probably going to smack. But also don't overthink with certain trade. Yeah. I try to not think at all now. That's like really my goal now, is like with what I've created in my model, I stay super mechanical to where I literally just do what the model says, right? So that's why Vampish, I showed earlier, I don't know if you're in here, but I showed my back testing. I did up to 3 months so far of back testing on my model, and I try to just get the data so that I know, okay, my probabilities are this, my profit factor is this, my risk reward is this. So if I take this trade, I know essentially what it should play out. And then I don't have to think, I just execute. Yeah. As soon as you start thinking and like, oh, I don't know, like all that stuff, yeah, you just get caught in your thoughts, and then the trade happens and you miss it. Or like getting stuck in a bias too. Like I used to get stuck in a bias, but now I don't ever get stuck in a bias. I could care less if price goes up or down. I just want to execute. Yep. Yeah, exactly. Unlike swing trading where things are more flexible. Yeah. If you're trading on those higher time frames, right, you definitely want to keep the bias in mind, right? Like, yeah, when you're like, say you're trading on the 4 hour, you know, your bias is your friend. You know, you don't want to ignore the bias. We're on a 5 minute, bias is still your friend, but also you can definitely scalp that little retracement short that comes on the trend, that you know that it's going against the trend, right? So yeah, on those on the higher time frames, you're not looking for those little short-term scalps. You're looking to ride the wave of that entire trend. Is the bot working? I don't know if the bot's working right now. I do have a Discord server. Let me see if I can sorry, the bot is not, looks like the bot is kind of finicky. Let me see if I can get let me see if I can fix the bot real fast. I think it's in the Streamlabs backend. Yeah, here we go. Okay, let me fix the bot. Chat box. Cloud bot. There we go. Oh, why did they turn it off? Active. Active. Okay. Let's see, are the commands there? Try it again now. Try it again now. I just reactivated everything. Oh wait, it just shut it off again. See, it should. All right, I just reactivated it. Let's see if it works. I'll test it out. I think it needs to be all caps. Oh, there we go. Now it's working. Perfect. It's back. Sometimes it like shuts itself off. I don't know why. All right, application for the trader affiliate is on. Okay. All right, looks like price might be setting us up soon for opportunity, but it's kind of just moving slow right now. It's 7:30, so hour in the market. Usually about, huh? I know, it was something. Some days we literally have a trade like right off the bat when the market opens, and some days we literally will not get a trade opportunity until like 3-4 hours in the market. I'm gonna go make a fresh cup of coffee real fast. I'll be right back, guys. All right, we got 4 minutes. Okay. All right, I'm back. And it hasn't done anything. I was kind of hoping that if I left, it'd kind of do something, but it didn't do nothing. Are you playing Clash? Oh, okay, good. I was gonna say. Yeah, the hype died a little. I usually will do this, and then it usually will have like another big move in the day. Yep. Yeah. Uh-huh. Bollinger Bands? Oh yeah. Okay. So the Fibonacci has the one I create. If you clicked on Fibonacci, you're gonna get a way different looking one than mine. I've edited mine a lot. So there's two parts to my Fibonacci retracement. The first part, let me zoom in here. So this area, I'm gonna just highlight it with like a box. So this area here, oh, you can't even see. Let me, so this area that I just highlighted with these lines, this is called OTE, or optimal trade entry. So when I finally see my model playing out, I draw my fib, and then it gives me my OTE, so my optimal trade entry. So for this, say this guy, this isn't a good example because this one isn't part of my model, but for example, let's draw the fib on this candle that inverted all these fair value gaps here. Let's draw this. So once my candle inverts fair value gaps, I draw my fib retracement, and then you see the lines, how they're retracing the candle's entire move. So the OTE is 786. That's the bright red line. But if price closes below that line, I go to the next entry opportunity. So 702. So I put my limit order at 702, hope price taps me in, and then the next portion of my fib, the standard deviations, the 1.5, 2, and 2.5, those are just my profit targets. So those tell me statistically with this move, price should move and expand to one of these levels. At least. It could go further, it could not, but at least statistically, it should move to one of these levels here, mathematically. So that's what this fib retracement tells me. It tells me my trade entry. So I don't market buy, I limit buy, or I limit sell. I don't just, like, once the candle closes, I don't just put in my order. I set my limit, let price go to where I want it to go, and then I go with the trade from there. But yeah, those are the two little different things of my my fib retracement of what, yeah. And I'll give you all my settings too. But this is just first hour type action. Yeah, exactly, Vampish. If you actually want Do you know how to get the fib tool on your screen? Yep, it's the second or third tool technically down. You click the little arrow out and you see you could star it. If you star it, it'll just be auto on your screen like it is on mine in this little like toolbar. And then you click it and then you would drag it out. So however on the screen, and then these are my settings. So I'll just show you my settings if you want to copy them. And I'll scroll down too and give you actually, yeah, those are my settings right there if you can see that. No, I mean, you can have it on. I just don't like it because it's just another thing on the screen that gets in the way. So if anybody on the stream too, I don't keep this stuff. If you're on the stream, go ahead. You can use this. You can use my fib retracement too. This is something I've learned. I had a friend kind of talk to me about the way he trades and utilizes this, but then this is also something I kind of learned in my mentorship of using standard deviations, which are mathematical just equations on when a price manipulates or moves, of how you can use those standard deviations to your advantage. For example, I'll show you guys another standard deviation that I could use right now that I see on the opportunity of the charts that we could identify potentially where a reversal would happen on the charts. And we'll see actually if price lines up right now with that once he's done copying these numbers down. No, you're good. Your colors too, Brenton, don't matter. Like, these are just my custom colors that I like. Okay. Yeah, you can do whatever colors you want, just as long as you can identify the differences. That's all that matters. Yeah. Hey, thank you, Ola, for the follow. Get these ones too at the bottom here, Brenton. The ones at the bottom of the screen, the reverse, the levels, and text. Thank you, Ola, for the follow. I really appreciate it. Thank you for coming in and joining the stream this morning. Got it. Perfect. So here's another mathematical. I don't use this really much in my trading, but here in this morning, you can see this manipulation, right? This manipulation that took out this low, tapped into London low, and then price clearly reversed. So I should have it saved right here. This is from candle bodies to candle body of the entire move. This is also a mathematical equation where you can target where price could go. So right here at our second standard deviation from this manipulation move, this level here is potentially where we can identify a reversal. So at that red line, when price hits into the number 2 standard deviation or the 2.5 up here, we can identify at these levels, price could potentially then have a reversal to then move down from there. Orders for the week. The crash. This is the same thing. So this is just different settings for the fib retracement. You don't have to worry about this one. I don't really use this one much, but it's something we can use to identify, okay, from a manipulative move, where could your TP's target be on that manipulative move? And then where could we identify where a potential reversal could happen? Yeah, so it's just a kind of cool tool you can use. I'm going to change these colors on this. Oh wait, I can use one color. There we go. There. And then save draw intent as. There we go. So yeah, this is kind of a cool way to kind of semi-predict. It's all based on mathematical equations. It's not like a guessing game type thing. It's more based on math. And this is like what smart money kind of does. So smart money would be like the big hedge funds and stuff like that. I kind of don't get the fib. So the fib is like, the fib can be used for a lot of different things, right? Vampish, like a fib, a fib could be used for optimal trade entry. A fib can be used for retracements. A fib can be used for expansions. A fib can be used for, standard deviations. A fib can be used. A fib is a tool that helps you with mathematical equations that can help you identify a lot of different things. It's not just used for one thing. It's used for a lot of different things. So like, not everyone would use the fib like I would, right? Like on this one I have here, my model, entry model, that I've created on this one, right? Not everyone's going to use it like this. So it's basically how you can use it to your advantage. But there's a million different ways people use a fib retracement. Because technically it's for retracements. That's technically what the tool's for, right? As long as if you're using it outside of the market context, right? Like what you're saying, Vampish, yeah, it won't make sense. But if you use it within the context of what you're looking for, it makes sense. It doesn't work in every scenario, right? It's like, for me, I only use the fib retracement to identify how far could a potential inverse move could move, so I don't hold the trade for too long, or whatever it is. And like when we finally get an inversion, you'll see it just helps me identify really what the fib does for me is help identify a take profit area. That's really what I use it for, and to get my entry, my optimal trade entry. That's really what I use it for. It's nothing more than that. Where can I place a take profit? Where can I identify my entry? And then that's all I use it for. And then I can use it too for like a trailing stop. Like, okay, we hit, the 2 standard deviation. Let's move our stop loss up to the 1 standard deviation. Yeah. That's really what I use it for. Exactly. Some people do it like crazy. I've seen other people do fib. Like if you go on YouTube, there's 1,000 different videos on how to use the fib retracement, and some of them are super complex. And yeah, it didn't make sense for me too. When I would go, because I would always hear the fib retracement is the best tool to use for trading. That's what I heard a lot. And then I would go try to learn about it, and I was like, dude, this thing literally makes no sense. Like a fib retracement makes 0 sense to me, at least. And so I only use it for, basically take profits. I'll be sure to look into that. Maybe a bit of backtesting. Yeah. Like this backtesting session I showed you guys, all the take profits are based on the Fibonacci standard deviation that it gave me when it inversed the fair value gap. So that's why these profit factors are a little lower, because I never let a trade run. On this backtesting session, I took full TP at the profit it told me to take it at. But I'm going to do another backtesting session of how I typically trade, which is hit TP on the standard deviation, but take only like 50% of the trade off and then let it run. And when I do that, typically the profit factor is like a 2 or better, and our average win to loss is about a 2 or more too. So I'm gonna eventually be doing some more backtesting on that. We'll see how price 2 reacts to these red lines. I'll just leave them up there. We just know that this is 2.5 standard deviation and 2 standard deviation from that manipulative move, and see if price gets there and how it reacts to that. Actually, we'll just put it up for fun. Because it's not in our way or anything. Oh, wrong way. There's also what other fib? I have a couple different ones. We have optimal trade entry, which is just basically my one fib without all the other standard deviations on it. So that's optimal trade entry. We have okay, we have new week opening gap and new day opening gap. That's a whole nother fib retracement you can use that looks like this, but it's a new week opening gap and new day opening gap. That's a whole nother one that you can use that's pretty powerful. You have and then discount. This is one I use for just on ranges. So if we went to the hour time frame, right, from this range here, this bearish range, price is now dealing in a premium. And if we're going to go short, we're in a 1 hour fair value gap, which would mean we then target external range liquidity to go into discount. So I use fibs to mark out ranges. And if we're in premium or discount within that range, you also have, oh, here's a new, is that day gap? Here's a gap right here. Actually, we could actually draw that. Yeah, so if you go down the 5 minute, you know, we can use this gap for this on our new week opening gap, and you can see how price reacts to levels. And look at it, it tapped into this level here and respected it just like it did over here. So this is a whole nother way to use the fib on the gaps that are created on weeks and days. And then on each level, you would see how price reacts, and then you would put stops at the next level. So like here on this level, price respected it, you'd put stops at the level below that, and then you hopefully hold it for the expansive move as it goes up. And then there's all the different, yeah. And you can see how price respected all these levels. Like here, went to here, rejected the level, you could have targeted the next level. Here, moved up, respected the level, hold above the level, expanded, you could enter on that, target the next level, so on and so forth. That's a whole nother one. That's a deep, that one I haven't traded off of, but that one is that one's a crazy one too. All right, so price is finally coming down to even test this fair value gap. We'll see. Does it test it, give us a bearish fair value gap, and then invert that, and then we can continue with trend? Or are we gonna maybe get a reversal here? Because we're still sitting at London high. We're still sitting at London high, and so we could have a reversal here now at London high to then continue downwards. And, you know, we did tap London low. So, I mean, could today target like a weekly low or even Asia low today? That would be a pretty big move if we were able to catch like an all the way down to Asia low. I don't know if that's going to happen today, but we also could just chop around. it's I don't have like a some people do like a static stop loss, so like every trade they risk the same amount. For me today, because of the way the market is, it's very choppy. I'm gonna go lighter on my risk. So like usually I would open up a 15 MNQ position. That's like my actually sorry, for a short I would open up a 10 MNQ position. But today I'm probably gonna do like a 3 or 5 on mine. So no. I base my risk off the current market sentiment. So if you zoom out, right, we're very in the 5 minute, it looks like there's these massive trends, but it's actually very choppy. Like if we go to the hour, it's very choppy. This is very choppy. So for me, in choppy markets, I know price isn't gonna move very far, and if it does, it's kind of like, oh, it's finally doing something. But typically in the choppy market, it doesn't move very far. So I know, let me do smaller risks because we're less likely to actually hit our TPs because it's a choppy market. It could reverse quicker. It can do different things much quicker because it doesn't have a direction. So when I know the market's in a choppier place, I'll lower my risk and lower my position sizing. But if I know there's a trend and it's like, okay, we're clearly bullish or we're clearly bearish on the higher time frames, I'm gonna go higher on my risk. So like if I knew there was a clear trend, I'm gonna go 10 MNQ on the short. But for me today, I'm probably gonna do for my MNQ like 3 or 5. And so that's how I base my risk, and my stop loss would be just at the nearest high. No, MNQ. So like contracts, I would open up 3 MNQ futures contracts. Yeah, and I can max open up 15 on this account. Yeah, so if I opened up 5 and say my stop loss was at this high and my entry was like somewhere within this fair value gap, I'm probably risking $500 to $700 depending on, you know, where my entry would be. Now if I'm doing a full risk, I'm risking like, you know, $1,500 to $2,000 on that trade. Yeah. But we also like, we trail our stops, so we try to lower our risk as price moves. So like, yeah, I might be risking, you know, $700 here, but then if I get another bearish displacement candle, all right, let's tighten it up a little bit. Let's take off some risk off the table because if it reverses, we don't want to get caught in that reversal. So yeah, we do trail our stops too as price displaces. So price is actually, displacement. Oh, trend. So like, let me do a little line here. So like, say this line here. Let me make it bright red. Say this red line here is my stop loss, and then price inverted this, but then moved even further down. All right, let's trail our stop loss. Let's put it here now. Like, there's no reason for me to have it all the way up here because price is showing its hand. Let's take off some risk. So now instead of risking $700, okay, I'm risking like $300. Okay, price inverted this next fair value gap. All right, let's put our stop loss to entry. So now we're literally not risking $1. This price, this trade's, we're not risking anything. Hopefully it hits TP. So that's what I mean by trailing stops, is like, we take risk as price moves. We take off risk as price moves. Yeah. Now sometimes you don't get that opportunity. Like sometimes I've had it where I enter, literally the next candle skyrockets to my stop loss and I get stopped out. Like, and that just sucks. Like it happens. And you can't do anything about it, but yeah. But most, like 8 times out of 10, you get a trail and you get a takeoff risk. Yeah, so like here, I'll show you an example. Let me, so I just put in a sell limit right here. So if I have my stop loss, I literally just drag it and move it. Like, see this yellow line? You literally just drag it and move it. And then if I have my take profit, I literally just drag it and I move it. So as I want to change it, I literally just drag it and now it's changed. Now, like, so here, if I, if I can literally tell you how much I'd risk. Say I entered right here, I'd be risking at the top of this high here $800 on 5 contracts, $840. So if I moved it to this high, now I'm risking $595. If I moved it to the top of this fair value gap, I'm risking $232 now. So I can see how much I'm risking as I move. Yeah. And you can also look at like your risk to reward. So if I like say I entered there, stop loss was here. Oh wait, whoops, I didn't buy. Let's do this again. So say if I entered here, stop loss was here, and our TP was like at this low. So I'm risking $855 to make $1,500 on this trade. So like you can kind of see your risk to reward on that. Your RR is what that's called. And that's a pretty good risk to reward. Like that's almost a 2R on that trade. It's a little less than 2R that you'd do. Looks like price actually respected this fair value gap and might actually continue higher. This isn't part of our model, but if you were someone who traded fair value gaps, right? Either if it inverted or not, this would actually probably be an entry signal for you, where it'd be like stops like probably right outside this fair value gap, and then you target like usually if you're doing fair value gaps, you're targeting like a 2R minimum. So if you're someone who trades fair value gaps, you know, you might have just gotten an entry on NQ as a respect this fair value gap. I don't know. I don't trade that way. That's not the way I trade, but all right, so this is the boring side of trading for anybody who's new to trading. Sometimes you just sit here and you just gotta wait. We've been at the charts now for about an hour and a half since market opened. I usually get here at me and the group that trade together gets here at 6 a.m. So we've been here for about 2 hours. Still no opportunity yet, which kind of sucks. It sucks when the morning's like that. The sweet spot for me in trading is like from 9, like once we hit like 9 a.m. or 10 a.m. that's kind of like the sweet spot. Today I'm planning on sticking around a lot longer on the charts because of my back testing I did on inversions. I kind of want to see, you know, if I trade throughout the day taking every inverse fair value gap like my back testing suggests, I should get a dub, and I'm gonna do like light risk on that. Once we get our first inversion, I'll take normal. Once we get after we get a winning trade, I'll probably even make my risk even lighter so I don't ruin a winning day if that is a winning trade. But this is kind of the boring side of trading, when it takes a minute for your trade to actually finally show up. We might get a we could get a little fair value up here. We'll see if price gives it to us. And again, if for anybody in the stream or the Google call, fair value gaps don't matter the size, as long as it creates one. Now, if it's like a pixel, we'll probably ignore that. But if it was like something this size, doesn't matter if it's a small one or a big one. We care about fair value gaps, no matter their size, because we'll see if that one stays and sticks around. And if price fails to displace this high too, and continue the momentum of this 5-minute chart, we could get our opportunity here. Looks like we might not get a fair value gap. We'll see. Vampish, what do you use to backtest? What software do you use to backtest? I use TradeZella. All right, so looks like we didn't get a trade fair value up here. Yeah, well now it completely took the gap away. But yeah, if it's like a pixel of a gap, I don't really consider it. It's got to be like at least like say if it was like that big, like that's a decent size one. But if it like sometimes they're like literally this big, and that is like if you wanted to do like points wise, that's like a 7 to 10 point fair value gap. You want it to be at least a little bit of a gap, or it doesn't really matter that much, but I like to have it like at least a 10-point gap. And points are just like the way price moves, right? Points are just different levels on the chart, or even ticks is another term that people will use. It looks like price might be failing to displace this high here, and it could start coming lower here. Oh, I think I forgot to put up the trash cans. Hold on. All right, I'm back. I totally forgot to put on my trash cans. Oh, Blakely. Hi. How are you doing? Did you just wake up? You slept in today? How you? What? You're silly. What are you doing today, Blakely? What? Oh my, what are you gonna do with Grandma Cheryl? Oh, nice. Like real butterflies? Oh. Oh, nice, nice. No. I know. It's about to do something probably like, hopefully soon. I don't know. It's just teaching you patience. All right. I guess in the oh my gosh. In the meantime, while we're kind of waiting for NQ to do something, I'm gonna do some Bitcoin analysis and check in on the charts over there. Let's see. So Bitcoin looks like it closed below the low. And tapped into this day time frame fair value gap again. Let's see on the weekly time frame. Okay, weekly time frame, it tapped into this weekly fair value gap. I want to see what it does on the weekly time frame this week. The 3-day tapped into its 3-day fair value gap here, and it looks like it's bouncing off of that. I wish the 3-day had a fair value gap we could invert. The 1-day, no fair value gaps. Okay. Vampish, we were talking earlier about kind of like that manipulation. Price did close below these lows here to the left with a big wick off of it. It could push down lower. Yeah, Bitcoin could probably head down to this consolidation area. There's even a little fair value gap down here, but we'll see what Bitcoin does. But it does look a little bearish right now. We could go into a little bit of retracement on the higher time frames. Because on the weekly time frame, so you have this dealing range, right? So let's get our discount. Where's our discount? Our range. Oh, no, come on. So price for Bitcoin on this current weekly range would need to come down to around $93,000 to get into discount. And there's a big fair value gap on the weekly time frame that hasn't been tapped into. That maybe price will come down there and then push up to all-time highs, breaking all-time highs again. So it could also hold this current weekly fair value gap that we're in. Let's check the monthly chart too. Monthly chart, there's not much. I think monthly chart looks pretty bullish, but the weekly chart looks like price could come down into this range, into discount before it heads up higher, which I would love that. That's what I'm kind of looking at on Bitcoin now. The fact that since this war started, it took out this low. I want to see what it does if it comes down into discount, and then can we catch something maybe down there after all this stuff has kind of like the dust is settled, because I think this week, I think some things sound like it might continue to escalate. Like it sounds like there's, you know, Iran's going to close that strait, and then if they close that strait, there's going to be retaliation, and then if there's retaliation, then the next thing's going to happen. So it sounds like there might be some escalation this week. It doesn't sound like anything's getting more peaceful, so it causes more uncertainty in the markets, which could cause lower prices. So that's what I'm kind of watching when it comes to Bitcoin and crypto as a whole. So it looks like to me, especially with these candles here, we failed to displace this 5-minute high here, right? We had the bodies of these candles and the wicks above that, and prices failed to displace. It did it twice, right? So we had these highs, price pushed up, failed to displace above the highs, pushed back down. Price hit the fair value gap, pushed up, failed to displace above these highs. It's rejecting those highs. Looks like we're pushing back down. So for me, it looks like potential either retracement or reversal could be happening here. And we got our fair value gap set up here, that if we can come down and invert this, we'd then get our model and then maybe target, you know, we could target these lows, or we even have potentially this 5-minute range that has been created, and we can target a discount of this range, like this manipulation block, this breaker block here, this next fair value gap, or we target London lows again, and maybe weekly low and Asia low. So we have a lot of liquidity below us, so we could get a nice bearish expansive move this morning if we could target. If we could get a trade all the way down to Asia low, that would be an amazing trade this morning to capture. I don't know if we'll get that. I'm not going to be, you know, betting on that. I'll be taking profits, partial TPs before that, and if we can hold longer, we'll hold longer. But there is liquidity below us to target that hasn't been tapped into. Hour time frame too. The hour time frame though does look pretty bullish. You have a fair value gap on the hour here created, another fair value gap on the hour here created. The hour looks pretty bullish, but you do have this massive hour fair value gap here to the left that price could respect and then push off. So we could finally begin our move of the day that we've been waiting for our model at least. Looks like we might be getting, this candle could present us with a bearish fair value gap here. That could give us also potential entry if the price decided to continue. So now this can give us a fair value gap. Now we have an entry opportunity on both ends of the market. So then that's when usually we get a trade pretty soon once we get the fair value gaps on each side of the market. And then hopefully we can actually finally catch something. Because now price is surrounded, so it has to do something in our favor. But this candle does have 3.5 minutes left on it. It definitely could take that bearish fair value gap away from us. Usually the last, when I really like to see a candle do something, I like it in the last minute of that candle. The last minute you'll really see what is that candle actually going to do. Is it going to, you know, give us that expansion to the downside like it's kind of doing right now, or is it going to give us, you know, fail to give us that fair value up and actually continue pushing up? But with this momentum, it looks, this is pretty strong. Hopefully it continues. I just would really like current price to be surrounded by 2 fair value gaps, because then I know a trade's coming. A trade's on its way. And if price, say price pushes all the way down and inverts this big fair value gap here, because of how wide my stop loss would be, this is pretty wide stop. If my entry was down here, if it's outside this fair value gap or within it, that's a pretty wide stop loss. So I'm probably gonna go 3 MNQ on this short, because I'd be risking, if I did 5, right, when we did the mock ones, that you're risking like almost $900. It's a little heavy risk for me in this uncertain market. So I'm gonna do 3 MNQ. That's probably gonna put me around $600 in risk. And I'll do 3 MNQ. Partial TPs will take off 2 MNQ, and then we'll leave 1 holding. And then if we invert the second one, I'll add another 3 MNQ to this position if we invert the second one, as we get more confirmations. And for everyone watching, one of the biggest things with trading is the patience aspect. It's really hard to sit here and not click buttons to trade. Like it's really hard to sit here and not want to open a position and you feel like you're sidelined and you're not taking part in the market and waiting for your model to happen. But one of the biggest things of trading, like, you want to be a successful trader who's able to actually, you know, get funded, get payouts, whatever. Are you able to sit here, wait for your model to happen, and be patient, and not click buttons just because you want to be in a trade? That's the difference between a profitable trader and someone who's just going to continue losing trades. It sucks. Let me tell you, it's not fun. It's boring when you're just sitting here not clicking buttons. But it's what will separate you from being a profitable trader and someone who's not profitable. Okay, so it looks like we got that fair value gap. either we're gonna invert this fair value gap soon, the bullish one that's down below us, or price here will just reverse and potentially invert this one above us. So now we're pretty locked in. A trade should come in pretty soon. Like my guess, within the next 10 to 20 minutes, we should be getting a trade opportunity. It could be in the next candle, or this candle currently. It could be in this candle that's currently moving around. But there should be a trade opportunity very, very soon. Now that price is completely surrounded by two fair value gaps, unless it somehow just chops within this range and never inverts to either one of them, we should definitely be getting a trade this very soon. We'll see if price here will give us another fair value gap here on this. I would love it if price gave me a fair value gap here, because instead of putting my stop loss up here, I might put my stop loss here at this high, because now we have two fair value gaps between my stop loss. So if price inverted the first one, I would just auto close my position, or soft close with manually close it if it inverted, and not wait for the stop loss to hit. And then if it inverted, I would immediately open a long. If this does end up inverting this bullish fair value gap. So that's one way I kind of lower my risk too, is I don't wait for it to hit my stop loss. If it inverts, I close and then immediately open in the other direction, because it's my model. That's just my model. We got another follow. Let's go. Marquise, welcome in. Thank you so much for the follow, you maniac. Stoked to have you here. Looks like we're finally about to get a trade. We've been patient all morning. Patient pays. Patience is profit. That's what we usually say on the stream, but patience is profit. But Marquise, stoked to have you. Hope you're having a good day and a good morning. Happy Monday. All right, we're in the last minute and a half of this candle. Once we get these 30 seconds out of the way, we'll probably see how this candle is going to close, and honestly, probably what's going to happen next. All right, we're in the last minute of this candle. Let's see what this candle starts to do, and it'll tell us probably how it's going to close. It looks like we might get a massive doji candle here on the bottom. Let's see, is he going to push? If I had to pick a direction to go this morning, I would love to go long. I would really love to go long. That mean price would invert these fair value gaps to the upside off the London high, right? So we're tapping the London high again right here. We invert these fair value gaps, then we can target, you know, these 2.5 standard deviations we mentioned before, these day highs. You know, you got weekly highs up here above us. I would personally love to go long here, but I'm not gonna get stuck in a bias and say I'm only going long or short. But if I had to pick a direction, I'd rather go long here. My stops would be a little tighter on my entries, and you're going with the overall trend of the market. If we went long here, I'm gonna open up 5 MNQ, So I'm gonna go a little bit heavier on the risk. If we go long, I'll do 5 MMQ. If we go short here, I'll do 3 MMQ. And we did get a second fair value gap here. So we got 2 fair value gaps now above us. And we're currently sitting in a 5-minute fair value gap that we could invert very soon. If you put stuff in the chat, if I'm not answering questions or something, it's because right now we're getting very close to a trade, and so I'm focused in on my trading stuff. But I will, don't worry, I will come back to all questions in the chat as we go on. But right now I'm going to be locked in on the trading. So if I'm not answering chat, that's why. Because our trade opportunity is probably coming in either this candle or the next one. I'm gonna get a fib ready just in case if we go short. All right. All right. Say we sell. I want to do 3. All right, 2.5 minutes left on this candle. Looks like it's failing to displace these lows. It could, in this next 2 minutes, finally come up into this fair value gap, test it, see if we begin to invert it. If we invert this fair value gap, stop loss probably would just go right outside this fair value gap at this body candle down here, that low. Yeah, okay, we're less than 2 minutes left on this candle. Let's see. It looks like it wants to push up. Let's see though. Oh, it's just gonna do it like the last 10 seconds. Zachary, you ready for almost taking this trade? I don't know if I think he's here still. He might be doing something with his family. Oh, okay, you're good. Looks like oh no. Oh my. Just chilling. Just another Sunday. Yeah, I'd be like, dude, you're a psychopath. All right, I will after once this candle closes, I'll watch it. See you. I told you, I was like, it's gonna come like right when your doctor's appointment is gonna happen. All right. Oh, it looks like it's not gonna invert anything on this candle, so this is stupid. It's probably gonna happen in the next candle. It's gonna happen very soon. I know that. Just a matter of when. Literally, it's ranging between these two fair value gaps, not giving us anything. But just wait. Once it inverts, you're gonna see like the power and inverse fair value gap, because it usually will give you a move, and you're like, oh, that's why you wait for those inversions. Because Once it inverts, it'll give you that move you're looking for. Sometimes it doesn't. I mean, we are in a choppy market, so lately it hasn't been like the greatest, but they do hit. Oh my. Choking on my coffee. Okay. Let's see this video. Sorry about. They're making like fat wakes too in the. What? Why? Oh my gosh. Why are they making like huge wakes? All the boats around are like bouncing up and down. A really nice boat. Yeah, dude, the dude in the front's like lounging. He's got his arms up and his legs up. Yeah. He's flying. There we go. Okay. Down. Yeah, down. If we get a move down, it could be really big because we could target Asia low, which is a very big move. Going down too kind of goes with the whole state of the world right now. Because, yeah. All right, so candle inverted it, but on a wick. We got to wait for it to close. We can't enter yet, but I'm going to set it up because it most likely once the wick inverts, it usually follows with the body. But it's just playing around right now. That's why it's important to wait for the close. So we'll see. I'm going to get it all set up. Looks like we're going to get a sell opportunity. And stop losses for me going to go to that. My stop loss is going to go to the 11:15 a.m. candle high. If we get this. Oh my gosh, it might not. It might actually bounce. And then TP will go to. Yeah. Okay, so we're seeing like, I probably could go. I'm gonna stick it to 3. That's $273. We make $427 on this trade. I'd rather go lower risk, because it could quickly invert and invert these fair value guys to the upside. You're doing 15. Okay. Look at it. It might not actually invert it. I swear. Imagine it. Imagine for like the next hour, it just ranges in between these two fair value gaps. Yeah, good. Good. Yeah, don't do it. Don't do it. What, you didn't have fun doing that? All right, I actually might not invert this. Let's see. 30 seconds left on this candle. Let's see what it does here. There's no way that it just did that. Oh, that's so annoying. All right, well, I guess we're not getting an entry on this candle. We might get on the next one. All right, yeah, we're gonna have to wait for the next one. Oh, I lost all my chat. this stream still going? He's the guy who's kind of like helped invest in me, and oh my gosh. The trading bot, I guess, got mad at Vanquish. He said retarded on it, and it got him in trouble. The bot didn't like that, and it said it's because he's bullying. My bad, Vanquish. The trading bots have like these specific words that it blocks. That's one of them. But yeah, the videos on YouTube, I would agree with you. There's so much information that they throw up on you, and a lot of them don't make sense. Okay, 3. All right, maybe this candle will give us an inversion. Maybe. It looks like it's heading down to invert, but we'll see. All right, let's see. All right, last 2 minutes almost on this candle. Maybe this one will finally give it to us. I don't know. We're still sitting at London high. See how price is just literally consolidating at London high now? Now we just need that displacement to either inverse one of these fair value apps, and then we'll be probably pretty solid. All right, last minute of this candle. Give us something. Come on. Dude, do more than a doji. We've gotten 1, 2, 3, 4 dojis in a row right now. Give us more than a doji. This one's more like a hammer candle. All right, 18 seconds. Looks like it's literally just going to range inside this fair value up again. Give us something, like literally anything. And it's almost 9 a.m. So 9 a.m. my time is noon New York session, which is like kind of like the lunchtime. So sometimes around this time, we'll start seeing another move of the day, kind of like what we saw at the market open. And then there's also the last hour of the day. The last hour of the day, too, you'll see a move in the market. The last hour is kind of like those market makers you know, either closing positions or opening, you know, their final positions to for the week or whatever, and then there's a move. But we'll see. We're getting into that lunchtime. Ugh. We've been ranging between these fair values for 5, 10, 15, 20, going on 25 minutes. That's crazy. Let's see if this candle can close bullish. We might get a change in state of delivery on these candles here, which would indicate potentially an inversion coming to the upside. All right, looks like we might be getting all right, looks like price might be moving up. No, it's gonna do it. It's gonna do it when I say so. Yeah, this one's pretty rough. This is a pretty rough session. This has just been long. I've just absolutely nothing. Yeah. I mean, we didn't really miss it because we didn't have the opportunity. It's just, yeah, if we were in the market maker meeting this morning. How do we get into the market maker meeting? Yeah, but they're like, hey, first, let's just wreck all the retail guys, and then we'll go long. Yeah, and then we're gonna go the other way. Really, all the market makers have access to our microphones and cameras, and they just watch us, and when they see us cry, they love it. They love it. Yeah, yeah. You're like, oh, it's gonna be perfect. We go to the doctor's feeling good because I got a banger trade. Nothing. Yeah, yeah. Oh, okay. Yeah, yeah. Okay. Yeah. Okay. Okay. Yeah, it's totally fine. Sweet. Thanks for hanging out. Okay, no worries. Yeah, jump off whenever you need to. But thanks for hanging out with us, dude. Sorry your first day is like lame. This is a really lame morning. Yeah, it is. It's totally part of it. All right, still no inversion. That's 5, 10, 15, 20, 25 minutes of literally price ranging within these fair value gaps. I can't. This is actually very unusual. It's usually like once it creates that next one, it's the next candle. This is This is when it's all about psychology at this point in your brain. It might actually move at 9 a.m. because at 9 a.m. we'll get a fresh hour candle. And so right now this hour is closing out. We'll get at 9 a.m. that fresh hour candle. And then hopefully we'll get the market deciding where it wants to go. That hour though looks pretty bearish. Like, right, we push up on the hour time frame into this big hour fair value gap, and price is now what looks like rejecting off that hour fair value gap. So these big wicks, right? We push up, create this big doji candle, and hopefully we can get early on a 5-minute inversion to then catch the hour inversion on this hour fair value gap here. And that'd be great. And then if the hour inverts on a fair value gap, it could go, we could get a nice expansive move to the downside this morning. Or worst case scenario, we just catch the move to that fair value gap and then we get out at that point. I love this. This is so much fun. What is our point? I can't believe it's making another doji candle. Oh my gosh. All right, last 2 minutes on this candle. Will we ever get something? I don't know. I'm gonna wait for at least one. I'm actually gonna probably today try to do like the model I was back testing, and just stay super mechanical on it. But usually that first one is good. The ones after that usually aren't the best. It's like the first two that you get are good, and then the 3 to 4 after that are not that great. There we go. All right, last minute on this candle. Let's see. Yeah. Do you have to leave like right now? Where's it at? Okay. This price action is terrible. Oh, 30-second watch. It's gonna do it here. I mean, I'm gonna get it marked out just in case. Get this already. Sell limit. Get it nice on there just in case. I don't think it's gonna invert it, but yeah, it's probably not. Yeah, this risk to reward on this one isn't the best. If we did like that, that's better. Okay, it did not invert. I thought maybe it would on that, but you're out. Okay. It probably is. It probably is. All right, I'll see you tomorrow. All right, we're okay. That candle wicked on the bottom of that fair value gap. Let's see if it'll start actually enclosing it below. But we still got a lot of time on this one. 4 minutes. Oh yeah. Yes, it's all on TradingView. Yeah, it's called paper trading. Yep, yeah. I could show you how to do that. Even maybe later. Actually later today. Yeah, definitely tomorrow. I could show you in the morning, like before we get into the market. Yeah. Yeah. It's basically just called paper trading, and it yeah. There we go. We finally got an inversion. Now, will the candle actually close outside? We still got 3 minutes on this candle. It might not invert it, but we'll see. I'm ready if it does. Literally it too, right after we got off the call. That's how it does it a lot of times. All right. Yeah. Oh my gosh, the second he gets off the phone. That's funny. All right, it's bouncing off the London high too, so I'm actually kind of excited. This could be a pretty decent trade here. 2.5 minutes. Yeah, see, now they'll start displacing, hopefully. Risk is pretty wide here. We're risking quite a bit. Actually, not really. No, we're not. We're risking only $340. That's not bad at all. Now our risk reward is not great. We're risking 462 right now at the high to make 258. But as we see, hopefully if we do get an inversion here, as we see price move, I'll be moving my stops down lower to get that risk off the table. But right now I want to keep it wide. Oh my gosh, no way. It's gonna go all the way back up. You gotta be joking me. Oh my gosh, that's annoying. Okay, well, a minute and a half left on this candle. We'll see what it does, but right now it looks like it's actually going to bounce right back into this fair value gap. Yeah, it looks like it's going to bounce back in that fair value gap. That sucks. But yeah, like I said, it's 9:03 a.m. right now, so we just got a fresh hour candle. And when you get those fresh hour candles, that's something to pay attention to when you're trading, because when a new fresh hour candle or higher time frame candle opens, you'll get some bigger moves, because those fresh candles are telling people on higher time frames what might the market do. So as you can see, right when we get that fresh hour, we get this big move to the downside that's now wicking back up into the fair value gap, which we haven't seen that in a little bit. Yeah, I literally think this is about a range back all the way down. Oh, maybe. All right, 20 seconds. Let's see. It's literally going right back into the fair value gap. All right, well, I don't think we're going to get a trade here. 10 seconds. Yeah, no, I don't think we're getting a trade. 2, 1. Nope, no trade. All right, well, maybe the next one. Holy smokes. But yeah, Brent, we can set you up tomorrow morning on the paper trading. And I can teach you how to know how to take a paper trade position, so then you can practice with us. Because I think it's really important to do the paper trading stuff so you don't get in the live market and accidentally lose money by doing it the wrong way. Yeah. That's how I started. When I first started doing the day trading, I did a lot of paper trading before I actually went to live market. I did like 3 months of paper trading. Uh-huh. Okay. Yeah. 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 Because the nice thing is with these kind of trades, when you're doing the 5 minute, if you get in a trade, you're usually not in it longer than an hour. And so you're just one and done. And typically, like today's a weird day. We've been here for 3 hours. We haven't got a single opportunity. Typically, it's within the first hour of the market open, you'll get an opportunity, and then you're done by the second hour of the day. So this day is kind of unusual, but that's the nice thing about when you do these little scalps. You do like 2-3 hours a day. You're done. You got your trade in. You either lost or won, and then you call it and come to the next day. Okay, so it's inverting it again. But it's done this like it's done this 1-2 times already. We'll see if it actually holds. Now, if this inversion does fail and we start pushing to the upside and we invert one of these bullish these bearish fair value gaps, what could be really good for our position if we go long is a lot of these people who shorted here will be trapped, which will get a lot of fuel for our bullish position to displace the upside pretty strong. So that's the one thing that's kind of good with how much we're consolidating here is like people will start shorting here, thinking the market's going to go lower, putting all their stop losses up at this high. So then if we actually flip and instead invert to the upside and we hit this high, we should displace pretty strongly to the upside if it does want to go higher. Because there's going to be a lot of sell or buy orders up here from people who thought the market was going to go short. So that does play in our favor if we do decide to go long here eventually. But we're 1 minute 40 seconds left on this candle, and this candle is actually showing that it probably is actually going to invert. So I'm going to get my limit order together, because this one actually looks like it's going to do it. We're not making a lot. We're making $198 on this trade if it hits. Still though, that's a good day. I would prefer it to be a little bit I'd prefer it to be a little bit more. I'd like it to be over $200 dub. But we'll see what the market gives us. Because I'll take a partial TP. Right now it's a full TP down there, but ideally take a 2 contract TP down there, and then if we invert the second one, I'll add 3 more to the position. Right now, it looks like we're getting that inversion. All right, 27 seconds. Looks like we're... Oh my gosh. Looks like we're finally going to do it. Thank you, SQ Top. Thank you for the follow. I appreciate you. 10 seconds. Looks like we're finally getting a position. See how it closes. And as soon as this closes, we will be... All right, there we go. Order is in. Let's see if it taps us in. Sometimes it doesn't tap us in and it runs without us, which would suck. Looks like we're gonna get tapped in. Let's see. Tap us in. All right, we're tapped in. So we're in a position now. I'm gonna change this one to 2. So we take a partial TP. And then there we go. So we're in a position. We got a partial TP at 2 standard deviation. And if we do come all the way up to this fair value gap up here and invert it, I will be manually closing my position. My stops are at the high here. So just in case if we get some crazy candle that decides to go all the way to my stop loss, I'm protected. But if we do invert this guy, I will be closing my position and then looking for the long opportunity. But we'll see how this plays out. I'm gonna delete my fib because I no longer need that guy. Oh, and I gotta get these all set. Limit by 2. All right, all my positions are kind of set up proper. Okay, everything's set up across all my accounts. Let's see if what's up, SQ top, SQL top. Looks like all the positions have opened up across all my accounts, and we're good. We're chilling. All right, let's see how this plays out. And again, I'm taking light risk here because of the current state of the market. We're in chop. That's why I'm going light on this. And I think if anybody else is day trading right now, if you're trading the markets, if you're trying to scalp whatever it is you're trying to scalp, whatever currency, I think you should be taking lighter risk because one, there's a lot of things going on in the world that, like the wars and things like that, that are a lot of uncertainty in the market, and the market is just in chop. So your moves aren't going to be as great as if we are in a clear trending market. So be wise with your trading. Don't full port your accounts. This is not the time to be full porting any account. This is the time to be wise and disciplined with your risk management. Really, you should never be full porting your account. I just want to make that clear. Yo. It inverted, and the candle currently is like, it's not straight up, but it just did a little retracement. We'll see if it... Yeah, I'm in a trade. I'm down $76 right now, so it's not that bad. Yeah, and I'm only risking like $300 on this trade. All right, we'll finally do it. Bang. Yeah. All right. Talk to you later. Bye. Okay. All right, sweet. Yeah, I'll let you know how this trade goes. Sweet. Talk to you later, dude. Bye. All right. Now it's just me and you, chat. Now we got to see how this plays out. I think this will play out well. I think we're going to at least hit partial TP, and then we'll see how there. See if we get some kind of expansive move. If we hit partial TP, I'll be moving my stop loss to break even, and then kind of just trailing it from there. See if we get an expansive move. Can we target Asia lows today? Or London? Can we first target, London lows? Can we target external range liquidity? These equal lows down here. And then maybe can we target, this weekly low or Asia low? I'm not set on that we're going to do that, right? We need to let price show us what it's going to do, right? And the way price is going to show you what it's going to do is the way it displaces, okay? And what do I mean by displacing? So if I have a position going down to the downside, if it displaces, that means I start seeing fair value gaps to the downside, okay? And that's the market showing its hand to me of like, okay, we're displacing the downside. We're creating fair value gaps that strengthen the market to the downside. And so that's favor for me. Now, if we start going to the opposite direction, say price here creates a bullish fair value gap, I'm not really nervous, or not nervous. I'm not nervous. I'm not really worried about my trade unless it inverts this bearish fair value up here. Price could come back up, hit this fair value up again, hit some of these breaker blocks or something. This manipulation block, right? You got this unicorn here. It could come back up and retest these areas before it decides to push down again. But if it inverts, that's when I'm like, okay, I'm willing now to close this position because now I could be completely wrong and price goes the other way and now it's maybe reversing. Okay. But for me right now, where price inverted, there's nothing here to the left that would say otherwise that we can't go lower. We have a fair value gap down here. My bet is we might have price come down and test this fair value gap before it continues to the upside. Or it inverts it and gives me confirmation that, hey, we're probably going to go lower and we can target this external range of liquidity or session lows and weekly lows down below us. But I let price tell me and I keep it very mechanical and don't get in my head. Okay. I try to keep everything super, super mechanical. So I don't have to think. I just execute when the market's telling me X, Y, or Z. And I think that's how you guys should be as traders. You should be very mechanical. You should create a model that works with your psychology, works with what you can handle as a trader. Because if you're taking, say you're taking on this trade a $3,000 risk, for most people, putting $3,000 on a trade is a lot of money, and that's going to get into your head. You're going to freak out. When you see you're in drawdown, you're not going to handle it well. But if you see you're risking $300 on a trade, most people can handle, okay, I'm down $70. I'm okay with being down $70. That's not that much to me. I can handle that. And so maybe you're a trader who says, I need to stick within my size I can handle and not cause it to be me to get emotional. If you're an emotional trader who's got emotions and you're freaking out and like you're all over the place, you're not going to be a good trader. It's going to get you all on whack. You're going to get on tilt. You're not going to perform well, all those things. You should be a trader who's very level-headed, who's not getting emotional, who just lets the things play out. That's the best tip I can probably give anybody who's getting into trading. We got pretty close to our TP there. We hit 1.5 standard deviation. Hopefully we can go a little further and maybe catch that partial TP down there. If we hit that partial TP, I'm immediately moving my stops to break even, and then that's a winning trade. It wouldn't be a lot. We'd probably make like $100 on that trade. Not a great winner if it decided to come and tap me out at break even, but hey, a PSP, profit's profit. So you can't get mad at a profitable day, even if it is a little bit green. All right, 50 seconds left on this candle. I'm kind of hoping it can close a little bit lower. I would love it if it can close below our 1 standard deviation here, just showing kind of respect of each of these levels. We'll see. I'm gonna go to the restroom real fast. Just let it kind of play out. All right, looking good. Looking good. Inside BTC is dropping lower too. I would like to see Bitcoin get into the $90,000 range and start holding there. Looks like with the way price is going right now that TP is most likely going to hit. I'm not going to move my stop loss yet because honestly I think we're going to hit TP. I can just move it to break even. And I can yeah. Beautiful. Okay, we're making lower lows here on these wicks. Loving it. Yeah, we're not making much on this trade, but it is what it is. Perfect. TP hit. Stops are going now. Let's go buy stop, and then we want to do 1. So now stop loss is at break even. And now we just see if we can now we can see if we yeah, if we can catch a dub here. I'm gonna put my stop loss actually just above this displacement candle here. Right there. So we'll be in a little bit of profit. I mean, like, I think we're making $5 if it hits stop loss. But now let's see if we can catch a runner. If we do invert this guy here, I will be adding to my position. So if we invert this next guy, I'll add 3 more contracts to my current position size, and we can hopefully snag a little bit more profit. But as of right now, I'm very happy with this. I'm just gonna put a buy limit way down here at Asia lows, just in case if we get some kind of crazy candle. I doubt it. I doubt we're gonna get some crazy candle, but we'll see. If we invert this next one, which we're getting pretty close, I'm gonna actually might get it set up because it looks like we actually might just invert this guy. And we'll add 3 more. See though, I need a little bit more. Let's see. Sell limit 3. Zoom in here. All right, looks like it might not invert it on this candle at least. Oh, wait, could be wrong. 10 seconds, let's see. Let me get zoomed in here so I can see you nice and well. 5, 4, 3, 2, 1. All right, maybe the next candle will do it. I assume this next candle might. Just gonna have it ready. Well, looks like we're gonna get this inversion here. We'll get to add to our position and maybe target, get a little bit more profit under our belt. And then, so if I take this next position, I'll be closing another 2. So now we'll have 2 contracts running on this. And my stop loss will just stay right above our position entry. So we still got 4 minutes on this candle, so we still got a little bit of time. See if we actually do invert. We are tapping in this 200 EMA. I'm not super, I don't really focus too much on the 200 EMA, but it is a good indication. Kind of what it kind of shows me too is like, okay, we're in chop, right? 200 EMA showing me we're in chop. Nothing much more than that right now. I'm excited. Looks like we'll get to add a little bit more to our position, which will mean we'll be able to lock in hopefully a little bit more profit for the day. Right now, I'm profitable $93 on that account. What am I profitable over here? $195 right now. Or realized P&L? What is our realized? Does it show me? I don't know. It doesn't show me our realized right now. So we'll probably look at it. Oh, wait. Does it show me there? No, it doesn't show me. We'll have to look at it later. But I think I've realized like $100 almost. I would love to get to $200 in profit. Because that's kind of like for my other account. To get the payouts, you need like minimums of like $200 in 5 days of trading a day. So ideally we can get to a $200 plus day. Okay, 2 minutes. It looks like it's going to invert. It could still bounce though. Say if price closed outside of my OTE but still inverted, I'd market buy instead of limit buy. If it's outside of my OTE after an inversion. Very rarely, though, does it close outside of one of our OTEs. All right, last 2 minutes of this candle. Let's see how it goes. 1:45. Last minute of this candle. I can take these off now. No one's in the call. All right. Oh, I hate wearing those headphones. I hate wearing headphones on my head. We also have this guy. Okay. Let's see. 46 seconds. Looks like we're getting it. Oh, nice. Look at it push. Here we go. 20 seconds. I'm hoping, I haven't done this yet because I haven't had this opportunity on this trading view setup yet. I'm hoping that it just adds to this and DCAs me in. That's what it should do. But we'll see what it actually does. Boom. Okay. We get a sell limit now. It might not tap me in. It might just run. I'm going to move my stop loss to this fair value gap up here. Yeah, I might run without us on this guy. Limit sell. 3 more. Oh, well. If it runs without us, it runs without us. I'll probably... If it runs without us and doesn't tap us in on this candle, I'll cancel this 3 limit order and then just let the current one just run. I would ideally love it if we can get tapped in. Price might retrace a little bit, but then leave a fair value gap here between this candle and this candle. That's what I'd really love. But this candle, let's move this fair value gap because that one's irrelevant now. And let's turn this into a bearish fair value gap. There we go. I'm going to move stops a little bit lower now to this displacement candle. So stops are a little bit lower. Even on one contract, we're up about 200 bucks almost. 165 right now. We're up in unrealized profits on the current position. So not bad. It looks like we're not going to get tapped in. And that's okay. We'll see. There's still 3 minutes left on this candle. But again, see the power of the inversions. Once it inverts, it usually likes to move. Oh, no. I don't want to do that. Cancel. No, I actually moved my stop loss. Yeah, it looks like it's going to run without us. It's okay. We'll just keep following our stop loss with... we have no TP. Actually, that's not true. We do have a TP way down at Asia low. I'm actually going to take that away. Cancel. Are you sure you want to cancel order? Yes. I'm just going to take that full TP away, and we're literally just going to keep following this with our stop loss. And that'll be essentially how we take TP. 2 minutes left on this candle. I doubt we're going to get tapped in now. I really doubt that we're going to get tapped in. Yeah, nice displacement. I'm interested to see how price reacts at these 5-minute lows here to the left that we created this morning. Ideally, we would these longers are getting squeezed, and we can get some really good fuel down here in between this low and this London low, and we display. Okay, I'm gonna take away now my my sell limit to enter. And we're just gonna ride. We're gonna ride with this this candle. Hey, welcome in. Thank you so much for the follow. I really appreciate it. Sweet, beautiful, beautiful. I'm gonna move my stops to the top of this candle now. This is a great displacement candle. So we've locked in. So if we get stopped out now, we're going to lock in another about $126 in profit. So that's a great day. We'd be over $200, I think, in profit at that point for the day in realized gains if we get stopped out. But this displacement candle is great. And we were able to catch a really good short here. Hopefully it runs. I mean, with one MNQ on the table, and if this thing decides to run, we could make a great little position here. That's a great candle. Now let's hope it displaces on this low. I want to see it displace here. All these longers just got trapped. I think that's why we're seeing a lot of this displacement, because you're seeing a lot of these longs getting trapped. And so at this low, there's probably a lot of stop losses here. And if we can get some displacement here and we shoot down to that weekly low, ooh, that'd be great. I just texted my brother. I was like, dude, the trade is running. He's probably pissed. He's gonna be so mad. All right, we're at this low. We're starting to see some buy pressure come in. Let's see what happens here. I would really love to see it displace this low and the London low here. If we can displace that, target that weekly low. Ooh. Oh, let's go, let's go. Let me see some. I'm gonna see on the 1 minute. Dude, 1 minute looks great. Oh my gosh, there we go. There we go. Starting to displace those lows. Sorry, Ave, I can't do the chat. I'm so sorry, dude. I gotta focus in on this stuff. I can't be like typing on the... All right, I'm gonna move stops probably to once this candle closes, if we can get a good displacement candle underneath this red line, like the candle closes below that, I might put my stops to that candle top there. We'll see. We'll see how it closes. Big wick. Okay. Actually, no, I'm maybe a little patient. I'll leave my stop loss where it's at. I moved it down to just the top of that fair value gap. I'm really hoping we can displace this low here. I would love that. Okay. Another fair value gap created. Let's see what we do here. See if we can displace lower. Does it kind of start consolidating? Maybe does it invert here? If it inverts one of these fair value gaps, I will then try to go long here and see if we can see if this was actually just like a little bit of a manipulation and then actually, you know, continues to expand. But or I might just call it for the day. I might just call it. I mean, one winner that smacks. Why sit here and try to chop at it, you know? Market's already garbage. Looks like we're gonna get stopped out here. Looks like it's about to invert. Let's see. See if it inverts this guy. I think we're locking around 140 bucks here if we get stopped out. It's a great trade though. We got stopped out. All right, let's check. Beautiful. All the trades are closed. That's a great day right there. That's a great day right there. Let's see. 230 for the day. 230. Exactly what we wanted. Right over that $200 range on a crappy trading day. That's great. How much is it? 240? I mean, I could try to catch along here. Holy smokes, look at that. Look at that move as it's inversing these. Because the thing is now, if we decide to fail flip, right, we fail this level, we decide to push up and actually begin to go long again, all these shorts are going to get trapped. Everybody who shorted this is going to get trapped. And then you're going to get fuel to displace the upside. All right, what would it be if I took buy? Well, I want to see what I'm risking here. If I'm risking too much, I'm probably not going to take it. And we put stops down to this low here. Yeah, we're risking a grand. 800 there. To make 2 grand. I'm probably just going to call it. I'm not going to take the second trade just because I already won for the day, and it's very choppy right now. Like, look, we ranged, literally went all the way back down, and now it's gonna push back up. It's very choppy today. Could just go to this high. I don't think I'm gonna open up the second trade. It could totally work and totally hit, but I'm green on the day. Why try to keep chopping at it, and keep going. The back testing I did would indicate I should take this, but for me, I like doing just like the kind of, if you can take one trade and be done for the day, boom, that's all you do. And that's really how I prefer my life to be. Like, I don't want to sit here for hours and just keep trading, taking 6, 7 trades a day. If I trade one trade a day, that's wins and smacks, and I'm done. That's ideal. And today we did. So today we made $230 on 45 accounts. So what is that? That's not a huge profit, but times 45 accounts, it's about 10K today. $10,500. It's a good day. Good day. That's why I love prop firms. You can copy trade them with each other, and you can multiply your little wins. So let's see if this trade will win. I'm gonna draw up my fib, just kind of see how it plays out. I think it will. Like, I do think this will, but for me, with the current state of the market, get the dub and go. $10,500 day, not bad at all. I'll take that every single day. If you can be consistently profitable with $200 a day, dude, you're killing it. I mean, $200 a day in a week, that's $1,000 a week, $4 grand a month, $48,000 a year on just trading. And you work 2 hours, 3 hours a day. That's killer. All right, everyone. That's kind of all I had for you guys this morning. We finally caught a trade. It took us almost 4 hours sitting here and waiting for that trade. But patience is profit. We waited for the model to hit. We waited for it to mechanically take place, and it did. And, that's all you can do. For me, I'm super happy for today. Happy with the way it worked out. I hope you guys enjoyed the content. I hope you're having fun watching this stuff. We trade the Nasdaq today. A lot of my audience is crypto, so this might be new to trading the Nasdaq for you. I love it. I highly recommend it. Super consistent. If you want to know more, you can join my Discord community. That's in the link down below or in the links into my description. Join my Discord community. Also, we have links down below in the description where you can start signing up for exchanges that you can do day trading with. We have a prop firm called Hero FX that you can trade the Nasdaq with. If you are planning on trading with the Nasdaq, please, or Hero FX, please reach out to me before you do it. I want to clarify some things that we found out. Basically, what I thought you could do with Hero FX, if you buy account for $1,000, I thought it's like a deposit, and then you're 10xing your $1,000, and at any time you could withdraw that $1,000. That is not the case. If you put in $1,000 to buy a $10,000 account, you lose your $1,000 immediately. You're already $1,000 in the red as soon as you get your account. We had a long talk with Hero FX yesterday. It's very unclear on their website. They are not clear, and it felt very shady when we found out that, because they do not make that clear. They make it as if you deposit $1,000 to 10x your deposit, not you're buying an account for $1,000 to get 10 grand, and you immediately lose that. You can never get that money back. Now we reached out to the support and says this is not at all what your website says, and you guys are being untrustworthy, and like it's not true to what anything says on the website. So please know that going into Hero FX. Now I still like it. You get 24/7 payouts. It's crypto friendly, so on and so forth. But I think there's better prop firms out there. I'm working on getting links for you guys and discount codes for you guys right now on Apex, Take Profit Trader, Tradeify, My Fund of Futures, and some others. And those are really my favorites to trade. I trade Apex and Topstep right now. Topstep though doesn't do any affiliates, so kind of a bummer, but oh well. But Topstep's great, Apex is great, Take Profit is great, Tradeify, My Funded. They're all really good opportunities, and then you can do exactly what I'm doing right here on the screen that I showed you this morning. And literally you can change your life completely with $50. Like some of these accounts, like the Apex, you're paying $40 to $60 a month per account. Most people have $60 that you can risk, and that's all you're risking. You're not risking your money on the chart. You're just paying for the subscription to have the money in the accounts to trade. You just got to get funded and get those profits, and I'll hopefully help you guys, learn how to do that proper. So guys, love you guys. Join the Discord. Make sure you guys shoot me a follow on all my accounts. There's gonna be more content like this coming out. Right now we're just kind of focusing on the live streams, really locking in this day trading, and I've been loving it. It's been really fun. Thank you everyone for hanging out with us today. We got another like 40 people hanging out with us today in the live stream. You guys are all awesome. I just love the support, and I hope you guys are loving the content. I'll see you guys later. See you guys tomorrow. Tomorrow we'll be streaming at market open again. So see you guys.